it looks to me like we should be seeing the 2011 highs once again, which means that silver can almost, $48 or so pretty quickly. And then we'll see some resistance and consolidation, and then we're going to break that. And I believe silver is absolutely destined for triple digits.
To me, the mentality or the mindset of an investor really is, I don't think of an investment in silver mines with the current prices. I'm always considering what would this project look like at $50 an ounce or triple digits, which I'm a firm believer that that's going to happen.
Hi, this is Mike Maloney with the Gold Silver Show, and I want to welcome Tavi Costa from Crescat Capital back to the show once again. Tavi, how are you doing?
Mike, thanks for having me. Looking forward to this, especially in a day like today and in a moment like right now, which is so critical. So happy to be here.
Yeah, well, silver has just been screaming, hasn't it?
It's finally it's having the explosive move. I think the beginning of an explosive move, as we've been both talking about for so long now, and it certainly seems like things are unfolding very quickly in front of us.
Exactly. So why don't you go and show us your first chart? You've got the silver breakout. Now, you made this chart a while back, right? This has been what date did you make this version of the chart on? Because I remember seeing this a couple weeks ago.
Yeah, no, I've been using this chart for some time, to be frank, and I've been noticing this consolidation period that we've had over the last 3 years. And a lot of people have lost faith in the metal, and to me, it was just a consolidation before a major breakout. And now this chart is actually as of now. I just literally just put this chart together. So it's a quarterly candle chart of silver going back to the 1970s, and clearly with breaking out now, and it's the beginning of a move in my view. I think we're going to chase those prior highs that we've had in those prior periods, and probably going to be breaking out, because usually triple tops don't hold, just like we saw with gold. We're probably going to be breaking out and going a lot higher than the prior highs. And so that's key here, right, as an investor to understand. And remember, gold is the one that really started this move. It started with its own movement above to record levels, and it continues to do a relentless move, mostly driven by central bank purchases. And now we're seeing the spillover to other things, and silver is the first one to be moving along, and the miners are probably the next ones, and they're already moving, but not having the explosive move we both would think that they would have in this environment.
Yeah, I want to point out to the public, Dan, can you zoom in on that chart once again? That not only do we have, from the 2011 high where Tavi has drawn that trend line across there, that we've broken. So we've gone through the resistance of the trend line on the quarterly. So each candle here represents 3 months, but there is a cup and handle built up since 2011. But look at the giant cup and handle that is building up from 1980 to today. This is the biggest cup and handle I've ever seen. I've never seen anything like this. So this is suggesting a move that is much larger than the cup and handle, or the handle has a little bit of a head and shoulders in it, inverse head and shoulders. The technical indicators here are just lining up for us. And now we've had the breakout, and then yesterday and today, we are now having the breakout on the daily. And by the end of this week, it should be the weekly level breaking past this trend line. You've got it on the quarterly. It doesn't exist on the yearly. It didn't exist on the monthly, the weekly, and the daily. It was just the quarterly that showed this. But once you've got the breakout that you show here, and then you get to the next one, like a monthly, and they all start confirming each other, it's like for certain. And we're off to the races, and you're talking about a slingshot move potentially. And it looks to me like we should be seeing the 2011 highs once again, which means that silver can almost, $48 or so pretty quickly. And then we'll see some resistance and consolidation, and then we're going to break that. And I believe silver is absolutely destined for triple digits. Do you believe silver is destined for triple digits one day?
Absolutely. And I would say, what's the crazy part of all this is, and it shows how undervalued the metal really is the fact that the gold to silver ratio is at 85, which is a historical high. If you go back in the history of this, actually, we're at the same level we were at the depths of the global financial crisis, and when gold and silver actually declined at the initial portion of, or the middle portion of that recession period. And then we saw a major run up in prices all the way to that 2011 period that you see in the chart. And, not to digress too much, but if you want a roadmap to all this, just look at silver in yen terms, the Japanese yen terms, which is already retesting those highs of 2011. And I remember using that as a roadmap for gold itself, and it worked. And I do think this is going to work here too.
So
and
show that to us again. Did you have silver with? Okay.
I don't have the chart here, but it
You've
does.
got gold. Okay.
It does include implies an appreciation of about 90% from current levels. And, I do believe that that's going to be the case. And the main reason for that, Mike, as well, is it's just not just a demand story. It's a supply story too.
Right.
And in this chart, you can see that silver production. And why do I use Mexico and Peru? Because Mexico and Peru are one of the largest producers in the world. They account for a very large percentage of production globally. And not only that, if you looked at the combined amount of their production, it is down 25% from peak levels, and actually about the same level it was 14 years ago. So, when you think about a supply constrained environment with a demand surging, this is what creates that explosive nature of the metal that we both believe so much.
Yeah, with dwindling supply, and now we should be seeing exploding demand. There's only one thing that can correct, that can make up for all of these imbalances, and that's price. And
that's
so,
right.
yeah. So what do you have next here for us?
We have recently acquired a silver mine, and when I say recently, about a year and a half ago, we acquired the 7th largest silver mine in the world. We did that before the move. A lot of people like to buy after confirmation in price. I like to buy things when they're cheap, not after they went up. And so that allowed us to do a leverage buyout of one of the largest silver mines in the world. And, to me, the mentality or the mindset of an investor really is, I don't think of an investment in silver mines with the current prices. I'm always considering, what would this project look like at $50 an ounce or triple digits, which I'm a firm believer that that's going to happen. And so when I think about a project that today's prices are already highly profitable, I can only imagine what this is going to be worth in a world that I think it's going to be the case in, potentially, we don't know when, but it could be 6 months, 3 months, 1 month from now. Things can move very quickly. So it is what gets me excited is to finding leverage to the silver price. And I think there's many other opportunities out there. I'm not just pointing out one. There's plenty others that look very attractive to all this.
Yeah, I just want to remind everybody that if you're going to dabble in precious metals stocks, if it has to do with mining stocks, you really need a professional to guide you through this, because and so look to Tavi or some of the other professionals. So go to Crestcat Capital. It's crestcat.net, right?
That's right. Yeah.
And take a look at what they've got there, and read this newsletter that they just came out with, because it's got about 20 charts or more in it. It's a big, all-encompassing letter, and we're only going to pick like 4 or 5 charts here, and that's it. Just focusing on mostly silver, because silver is the big story this week. Things are finally happening. I've been saying gold is going up, it's setting record highs. It will drive silver with it. So the time to buy is while prices are low. Well, they're already taking off, but before silver hits any type of resistance, I think we're going to see over the next, it'll be soon. I don't know whether it's in this year or whether it's going to take 2 years, but we should be seeing silver up near the 2011 highs. And then there will be another slingshot move as it explodes past that. And then I think those triple digits are in the cards for us. Okay, so we've got foreign central banks transitioning towards gold. Explain this chart to us. Hi, I just wanted to take a moment and thank you for subscribing and mention that if you'd like to help our channel, please consider my company, GoldSilver.com, the next time you buy precious metals. We're one of the most trusted names in the industry. Our prices are sharp, delivery is fast, and we have an insiders program where you find out exactly what I'm doing with my own investments. Thanks for making GoldSilver.com your dealer. And now back to the video.
Well, it's the fundamental reason why someone would own silver, in my opinion, but it starts with the thesis behind gold. And what we're seeing recently, and really started back after the global, I should say, the COVID recession, with this bonanza, or I should say this massive amount of fiscal stimulus that came from every central banker governments, and not only fiscal but monetary too. And we've seen this accumulation of the metal happening, which is the blue bars in this chart, basically looking at how much central banks own of gold relative to their balance sheet. And then the white line, we're actually looking at, how much of their ownership of U.S. Treasuries relative to how much Treasuries are outstanding. And we're seeing a flood of issuances of Treasuries, and we're not seeing the big buying coming from central banks. And that's really the driver of gold itself. And you see the big divergence between gold rising and Treasuries falling apart. And so that's the fundamental reason to own gold is really the need from central banks to transition towards the metal as they need to improve the quality of their international reserves. And that need is far from over. I mean, as he shows in the chart, we could see central banks owning up to 70% of their balance sheet. We saw that back in the 70s. And so as we see the monetary systems become more and more unstable, the need for holding high quality assets is going to be more and more prominent. And so I think gold is going to play an important role here, and it's been playing that role here in the last couple of years. And I think it's going to be even more as we approach this end of a globalized era, not only on a logistics standpoint, but really on a financialized standpoint of when economies used to really finance each other's government bonds. And now this is changing. They all want to own a neutral asset. And gold is going to be the main alternative, in my opinion, to really accomplish that goal for most institutions like central banks.
Yeah. Well, it's interesting. Are there any central banks that own Bitcoin yet? There might be one or two, but gold is the foundation of everything. And that's the thing that's most trusted and least volatile. Although, in the blue lines there, I can see, back in the 80s, 1980, it's a peak because that was the peak in price. So this is ounces times price. And so it's measured in dollar value against the other holding, the treasuries that are in the world's central banks. So, and you can see that, it down in the year 2000, when gold was $250 roughly, the level that it was at. And then central banks were selling as it rose from $250 up to $1,900 in 2011. So there isn't that much difference between the year 2000 and 2011. And then there was the pullback into 2015. But now you can see that if you had the price overlaid on top of those blue bars, you would see that they're doing a lot of buying now, and the price is rising. And so we're going to see some explosive moves here. Okay, what's next?
I was just going to point out one thing, Mike, that you point out essentially, but the early 2000s was a bull market for gold. And notice that it wasn't driven by central banks buying. This time is, to me, it's even more critical because we're actually seeing record amounts of central banks purchasing. And that white line wasn't the case. It was actually going up in the early 2000s. This time is collapsing. In other words, central banks are not financing each other's government anymore. And so that's a key difference, from a structural difference from that era, and why I think this is going to be an even more important bullish move for gold. But ultimately, it all boils down to the chart that you're seeing in the screen, which is real assets relative to financial assets. As you pointed out many times, how expensive equity markets are, bond markets, and all sorts of other financial assets, especially long duration ones, relative to hard assets. And we call here real assets. We even include real estate. But commodities really are, if you look at the realm of those real assets, commodities really are the main part of where the most undervalued portions are. Although they're linked to real estate, you would likely see the big re-rating of prices, in my opinion, coming from commodities. And metals and mining is to me one of the most attractive, although I like all sorts of commodities, agricultural, energy, and others. The metals and mining, it becomes even more important for many reasons. For the gold reasons, the gold thesis itself, from the monetary dilution and what we're seeing in central banks globally. But also, I've never seen a bull market in gold that is not accompanied by other metals: copper, silver, cobalt, zinc, and so forth. And those metals are extremely cheap. Silver is the main focus here. And the main reason why is we see a bull market in gold, we're likely to see silver lead the way to the upside. But think about, from a construction perspective, how much we're seeing in infrastructure developments because of the deglobalization trends that are escalating globally here, and causing countries to be to really go back and rethink about their own logistics and operations, and having to build up. And we haven't seen anything like this in many decades. It probably is the biggest infrastructure development we're seeing in the last century or so. And that's going to probably drive commodities much higher, and entering an inflationary era, which is very, very bullish for hard assets. And so to me, it's seeing, gold to silver ratio at 85, and this environment sort of, setting the stage for investors, and people being so skeptic about, the fact that we have to spend time explaining what the thesis is to buy gold and silver and all that. It's just ludicrous in my mind. And it's just, a testament of the opportunity.
Yeah. So this chart basically does say it's time to get real and, own real things. All of the paper assets are way overvalued, and moving from paper into tangible wealth this is the time. So anyway, I want to thank you so much for taking us through these charts. This has been wonderful. And I want to remind people, go to crestcat.net and check out this month's newsletter, because it's awesome. And if you're going to dabble in mining stocks, which give you huge leverage to the underlying price of gold or silver, you want a professional like Tavi or one of the other trusted professionals to help guide you through this, because typically investing in mining stocks is a losing game if you don't have somebody doing all the proper due diligence for you. I want to thank you for watching. Thank you for being here, Tavi. It was great.
It's always a pleasure talking to you. Thanks for having me.